Hello, everyone. Welcome, guys. Welcome, welcome. As you guys know, this evening is beginners class or beginners class for beginning traders. All right. So I want to welcome everyone. Um, our beginners class. So this is for traders who've been trading for not a long time, right? 6 months, right? A few weeks, trying to still figure things out. All right. So I call this your safe space. So we should not have any of our traders here. Traders have been trading with us for a while. So this is for new traders. All right. So welcome, guys. Welcome, everyone. So I want to go through in our beginners class. There's certain things that I believe that new traders need. All right, and a couple of things that traders always want to know is, how do I enter? Right. So when do I buy and when do I sell? And what I tell traders is there are a few things that we need to do before that, right? Before any buying and any selling. All right. And the first thing is we need to focus on our mindset. All right. And as new traders, we don't think about that, right? But trading is 90% of the work that we need to do in trading is all about our mindset. All right. Execution, right, comes after that. Your plan comes after that. So first thing we want to do, and ask any questions. So just leave a miss if anything in particular you guys want me to cover. Just leave it in the chat. All right, and I'll make sure any topics, I'll leave it in the chat, and I'll be sure to cover that. All right. But for new traders, I always recommend this book here. You guys should see it on my screen, and it's called Trading in the Zone, right? Trading in the Zone by Mark Douglas. All right. How to master the market with confidence, discipline, and a winning attitude. All right. So, Trading in the Zone, Trading in the Zone by Mark Douglas. Highly recommend this book. All right. Master the market with confidence, discipline, and a winning attitude. All right. So our mindset has a lot to do with our success in trading. All right. So mindset. All right. So we provide this book free of charge to our students that do our one-on-one coaching with us. All right. But you can actually get it on YouTube. So if you go on YouTube, type in Trading in the Zone. All right. Type in Trading in the Zone. It will come up, and you can actually start listening to it after after this. All right. So Trading in the Zone, right, by Mark Douglas. All right. How to master the markets with confidence, discipline, and a winning attitude. All right. So I'm going to give you guys some tools that you can take with you this evening, so that you're not guessing, all right, when you trade, and you can start your trading journey the right way. All right. The number one question we get from traders is, where do we enter? All right. Or how do I buy? I want to buy a stock, right? All right. Where do I buy? All right. That's the number one question traders always have, new traders, right? David, where do I enter the trade? All right. And you would think, well, the second question would be, where do I exit? But that's not usually the case, right? We just want to enter and hope that everything works out fine, right? And we make lots of money. But in trading, that's not how it works, right? So we need an entry and an exit. All right. So we need to make sure that we have an entry, an area to enter, and then an area to exit the trade. All right. And the way we do that is by support and resistance. So as a beginning trader, this is important. All right. We need to know where we're going to enter and then where we're going to exit the trade. All right, where we're going to enter and then where we're going to exit the trade. All right, and we do that by using support and resistance. All right, support and resistance right here. So you guys should see my chart. All right, support and resistance. You look here, right? Support and resistance, the keys to your success. All right, so support and resistance right here. Support and resistance, the keys to your success. All right, hold on. Hold on. All right. So support and resistance, the keys to your success. I'm going to go through how this works. All right. Those of you who are here for the first time, I would recommend taking a picture of this chart here. All right. Take a picture of it. All right. I recommend laminate it, printing it, have it printed out when you guys get a chance and laminate it. All right. It's that important. All right. So support and resistance right here, the keys to your success. All right. All of your buying, guys, all of your buying and selling will come in here at support and resistance. Now, I'm sure if you've been around for a little bit, you've probably heard of support and resistance. If not, right, we use it a little differently, right? Most traders, right, when they look to enter trades, if they know about support and resistance, right, they look to buy on a break of, well, they look to buy here at the bottom of support and sell here at resistance. All right, so they'll buy here and sell here. Just keep in mind, resistance is made when we have price. This is your price right here. Price right here. Reach a high. All right, and it does that a second time, and that's your resistance. A first time doesn't count. That's just a high. All right, so if it reached to that point, we'll call this $100 here. Right, $100. All right, that's resistance. And then let's say $50 here at support. All right, so that's $50 here. All right, so the price gets to $100 right here, and it does it a minimum of twice. That's resistance. All right, that's resistance. And just know that we have buyers at resistance and sellers at here at resistance also. So there are buyers and sellers here at resistance. And just think of resistance as this your ceiling, right? So your ceiling, that's resistance. The more touches we have at resistance, or that $100 mark right here, that $100 mark right here, the stronger the resistance. All right. And ask any questions, guys. If you have any questions, just ask me. This is your opportunity. This is the beginner's class. So this is for you. All right. We need to learn how to do this. All right. So resistance, right? The more touches we have at that top, at the ceiling, at that $100 mark, the stronger the resistance. All right. And support is at the bottom here. So think of support right here as your floor. All right, so support is your floor. All right, your floor right here. That's that $50 line. And just know there are buyers and sellers right here at support. All right. And what we're hoping to have happen is that the price either breaks resistance or breaks support. Right? Most traders and most new traders trade this area here. All right. So most new traders, you come into trading, right? And this is what's taught, right? Is that you trade this area here. All right. Just know that this is not tradable. All right. So between support and resistance, right? We call this consolidation or accumulation or distribution. It is not tradable. All right. So this area in here is not tradable. All right. And this area here, support and resistance can become really narrow. I mean, you can see it like this, right? And as price consolidates even further, you can see it like this. All right. So just know that in the middle there between support, right? So resistance and support is not tradable. All right. So how do we trade How do we use support and resistance to trade? All right. How do we use support and resistance to trade? So we don't guess. We don't just randomly enter trades, right? We don't just randomly enter the trades, right? What we are waiting for is for the price to break resistance. All right. So we need the price to break resistance. And what that lets us know is that now the buyers are in control of the price. All right. So just remember, we always buy on a break of resistance. So we're going to buy here when the price breaks resistance. All right. Remember, ask any questions, guys. All right. So here is resistance. Here is resistance. Here is resistance. Here is resistance. Support, 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 support. All right. Buyers are here. Sellers are here. Buyers are constantly pushing that price higher, right? Resistance is here. Sellers are constantly pushing that price lower. So there's a battle between buyers and sellers, right? Between here, no one is in control. So the buyers are not in control, right? The sellers are not in control. So no one is in control. We've got to wait till the buyers get in control right here. And we'll know that when the price breaks resistance. So this is when we buy, when the price breaks resistance. All right, so write this down. We're always going to buy on a break of resistance and sell on a break of support. All right, so we always buy when the price breaks resistance, and we're going to sell, exit when the price breaks support. So let's say here, price breaks resistance here, comes down, breaks support. This is where we would exit the trade. So we would buy here, and then we would sell here. All right, and then that's it. We're done. Trade's over. All right, trade's over. All right, now, if the trade works out to our favor, right? So in this case, right, it didn't work out. If it works out in our favor, right, and we bought here, right, we bought here, and it kept on going, all right, we would close the trade, right, when the price breaks support. So let's say the price went up, consolidated. We know that it doesn't go up forever in a straight line. If it breaks support here, then we would get out. All right, so we would have bought here and then sold here. All right, and this would be our trade, right? We don't buy here, we don't buy at the bottom and sell here. All right, or we don't buy here and sell here. We buy on a break of resistance because the buyers are buying, right? The institutions, hedge funds, right? Whatever we want to call them, that's where they buy when the price breaks resistance. All right, so just remember, support and the resistance, the main thing you guys want to know is that we need that price to break resistance, right? And that's our indication, right, to now buy. All right, and if it breaks support, if we break support down here, then we sell. Okay, so we want to buy on a break of resistance, sell on a break of support. Okay, very, very important to know, especially for new traders. Okay, we don't just randomly enter the markets, all right, and start trading. All right. Now, this is where we buy and this is how we sell. This is how we buy and then this is how we sell. Well, what do we do after that, right? And a lot of traders will ask, well, David, you know, how do I stay in the trade, right? How do I stay in the trade, right? Yes, we know when to enter and when to exit. Well, now, how do we stay in the trade? Well, this is how we stay in the trade. The next chart here, you guys should see it. If not, please let me know. All right. And this is your roadmap, right? This is your roadmap. And this is called the 4 market phases. If you guys have seen this, great. If not, well, you see it for the first time. All right. So this is your roadmap. And as new traders in particular, right? Even our veteran traders, they follow this process. All right. The 4 market phases, all right, that every trader must know. All right, so look here, the four market phases that every trader must know. All right, so as new traders coming into trading, this is your roadmap. All right, this is your roadmap. No guessing, right? This is your roadmap. All right, so let's go through it. The four market phases that every trader must know. If you don't, if you're seeing this for the first time, right? Take a picture of it, a screenshot, print it out, and I always recommend to our traders to laminate it so that you guys have it always. All right, the four market phases that every trader must know. All right, so let's start. All right, the first phase is called the accumulation phase. That's phase one. The accumulation phase. Phase two, the markup phase. All right. Phase three, the distribution phase. All right. Phase four is the markdown phase. All right. Then repeat. Phase one is the accumulation phase. Phase two is the markdown phase. Phase three, the distribution phase. And then phase four is the markdown phase. All right. So this is the way it works. All right. Price comes down, makes a low. Here is your support and resistance. That's the accumulation phase. All right. So just think of accumulation as institutions, hedge funds, right? They're building positions, they're accumulating stocks. For example, they're building positions, right? They like to buy at the low. All right. So let's say this was $100 here. All right. Fell, came down. Let's say this is $50 here, right? They'll start accumulating, the accumulation phase. That's where they start buying. All right. So that's why this is not a tradable, right? Right. We need the markup phase. We need the trend to start before we get in, right? So we want to buy at the bottom, right? The accumulation phase will happen either to the left, bottom left of your chart, the middle of your chart, so somewhere in here, okay, or the bottom right of your chart. All right, that's where the accumulation phase will come in, right? Never at the top, never at the top. It will always happen at the bottom, left, center, middle, or the right of your chart. Okay, that's the accumulation phase. And again, what these hedge funds are doing, institutions are doing, is that they're building positions. So we need to know, you need to know how these markets work, right? In order to profit from these markets, right? We need to have the right mindset, right? Trading in the zone. You guys saw that book, right? Trading in the zone. But then we also need to know where to enter, where to exit, all right? Support and resistance. And we need to know how price moves, right? How price moves. The four market phases that every trader must know. All right. And as new traders, you guys have to know this. This is the beginner's class. All right. And you guys need to ask me questions. If you're not sure about this, you know, get in the chat, ask me some questions. All right. Because this is important. This is important. And I don't care if you guys have been, you know, if you've been trading 1 week, 2 weeks, six months, 6 years, right? I know traders who've been, you know, been around for years and they don't know this. And that's not good, right? Imagine getting into a profession, which trading is a profession, and you don't have the right tools, right? And we don't know how the markets work. All right. So this is very, very important. All right. Save you a lot of time, a lot of headache, and save you some money too. All right. So accumulation, markup, distribution, markdown. All right. Accumulation, That's where we start. Everything starts with the accumulation phase. It's going to happen at the bottom left, center, middle, or the right of your chart. And what we're looking for is we're looking for price to come down, right, from a high, right? And then we want the price to break resistance. All right? Okay, so let's go through it. All right. Okay, so we're going to start here. Price fell, right? Accumulation phase. So institutions, hedge funds, they're accumulating, they're building what we call blocks of shares, right? Before they move the price. It's $100 here. Let's say it fell to $50 here. All right. We're going to wait and wait and wait, right? And this is where traders don't want to wait, right? We want to just get in. We need to wait, right? As long as possible for that price to break resistance. Then we buy. All right. And we're going to buy here the price break resistance because we know the buyers are now in control. All right. The buyers are now in control. So we waited for that price to come down. We call this the markdown phase. We're going to wait, right? Let it go through that accumulation phase or consolidation phase. Right? Buyers come in, push the price higher, and we'll look at some examples. We'll look at live examples this evening. All right. All right. Price breaks resistance. That's our entry. All right. We don't buy here. We don't buy here. We don't buy here. We don't buy here. All right. We only buy here, enter here when that price breaks resistance. All right. Once it breaks resistance, we're out of the accumulation phase. We are out of the accumulation phase. We are now in that markup phase, right? That's when traders get excited. That's when we start moving higher, right? Now buyers are in control. That's called the markup phase. That's our trend. We need this markup phase to make money. Can't make any money here, right? We need buyers to come in, right? We need this markup phase, right, to make money. All right. So we bought here. We would have bought here, right? Buy here. All right. Price moves up to that markup phase. All right. Understand, and especially as new traders, understand the price does not go to the moon. All right. I know we want it to go to the moon, but that's not reality, right? Right. It will move up, then slow down, stop, and then consolidate again. All right. So it never goes up in a straight line. All right. When that happens, and we're still in that markup phase, we're still in the markup phase. All right. So it consolidates here. If we get new buyers to enter the market, just like here, right? New buyers to get into the market, the price breaks resistance again. Here is resistance. Here is support. Here is resistance. Here is support. Right? Here was our first buy to enter here. Here is our second buy to enter if the price breaks a new resistance. That's called the reaccumulation phase. All right. So we got accumulation phase here. This is called reaccumulation phase. So that's new buyers. All right. New buyers entering the market. All right. Very, very important. I get so many traders that they want to sell at resistance. So they want to get out. The price gets at resistance and they want to get out. And they don't understand if that price hits resistance, right? There's a good chance that we'll get follow through. Big buyers will come in, all right, and now push that price higher. All right. So that's what we want, right? A lot of times we have traders who short during the markup phase, right? They look to short during the markup phase. We can't do that. All right. Because guess what? The buyers are in control. All through that markup phase, buyers are in control. All right. So just remember, accumulation phase, phase one, phase two, the markup that will happen when the price breaks resistance, buyers are now in control. All right. Reaccumulation phase, right? We have new buyers coming in on a break of resistance. And then the third is the distribution phase. All right. Distribution phase is when the price doesn't make a new high. Doesn't make a new high, kinds of stop, right? Stops here, makes a high, doesn't make any new high. All right. Doesn't break resistance. All right. Break support. So it breaks support here. And now we would exit the trade. All right. So we would have bought on a break of resistance and sold on a break of support right here. That's our trade. That's our trade. All right. We would have bought here on a break of resistance, sold here on a break of support. All right. So sellers, price break support, sellers are coming in. We would be out of the trade. We would be out of the trade. All right. We could short it, but for now, we're out. So we would have bought here, sold here. All right. We're not going to buy down here and try to sell up here. That's what most traders try to do, right? Buy at the bottom, sell at the top, right? Just know that we can't do that, right? That's not going to happen. We're not going to catch the very bottom or catch the very top. We want what I call the meat of the trade, the middle part here. Buy at resistance, sell at support. All right. All right. Okay. All right. So we're going to buy here, break of resistance, sell here, break of support. If you guys don't have this chart, you want to take a picture of it. After the sellers come in, that's called the markdown phase. All right. And we should be out of the trade. When the price breaks support, we've got to be out of that trade because sellers are now coming in. And we don't know how far these sellers will take the price lower. So we don't want to be in these trades. We don't want to be in these trades in position when the sellers come in. All right. Because again, support is your floor. If they break through that floor, that price could go very, very low. So we want to be out. All right. Protect our capital. So buy here, sell here. Remember that. Right? That's your meat of the trade, the middle part of your trade. All right. That's the markdown phase. That's the markdown phase. All right. Within the markdown phase, just like reaccumulation, we've got redistribution. Redistribution. All right. So we have resistance and support here. The price breaks support here. Just like here, break resistance. We have new buyers entering the market. Here we've got sellers, new sellers entering the market, all right, or your position to push it even lower. All right. So we have new sellers entering the market to push your price even lower. So we really want to be out of that position when the price breaks support. All right. So redistribution, new sellers coming in to push your price lower. All right. So very important, guys. Very, very important. All right. Let me know if you have any questions. All right. All right. Within the markdown phase, we have accumulation, which starts all over again. This is your roadmap. There's only 4 phases. All right. So it's easy to remember. All right. There isn't a fifth phase, right? 7, 6, 7, 8, 10, right? This is it. All right? This is it. So it's only 4 phases, 4 market phases. All right? So phase 1, phase 2, phase 3, phase 4, and then starts all over again with phase 1. All right? The accumulation phase. All right? Price breaks resistance here, and we start all over again. All right? So 4 market phases that every trader must know. All right? Accumulation, markup, distribution, markdown, and starts all over again with the accumulation phase. All right? Very good. All right. We'll take a look at some live examples. All right. The next chart here is trend following. All right. So everything we do, guys, is trend following. We follow trends. The way we make money. All right. Raymond, is there always a reaccumulation phase? Good question. Good question, Raymond. Let's bring this up. Let's go back here. All right. So is there always a reaccumulation phase? No, absolutely not. All right. So let's talk about that. So reaccumulation phase is right here. All right. So let's say, for instance, right, price is right here, doesn't break resistance, right, comes down, breaks support, right? So we would have gotten out here. So here would have been our buy signal right here, and we would have gotten out here. We would have bought here and then sold here. All right. So no accumulation phase. All right, Raymond. We have to break, right? We have to break resistance. We need new buyers to come in. All right. For this to be considered reaccumulation. All right. So no, there's not always a reaccumulation phase. Now we can have several reaccumulation phases though. Okay. So this right here is distribution. All right. So let's say, for instance, price does this. Hold on. All right. Hold on. So let's say, for instance, price does this. All right. Breaks resistance. So our entry is here, right? Reaccumulation because we had new buyers come in to break another resistance level. And let's say over here, right? Price doesn't break support, it breaks resistance. All right. So now we have another reaccumulation phase. All right. And let's say price moves up higher, right? Up into this area in here, consolidates like this, breaks another resistance level. That's another reaccumulation phase. Okay, so as long as the price keeps moving higher, doesn't break support, we can keep reaccumulation phase. We can have multiple reaccumulation phase. And the cool thing here, if we are aware of this and we realize that, we're in the markup phase, right? We can keep adding to our positions. All right. So we could have, here would be our first position, second position, third position, let's say here, and then even fourth position. Okay. So as the price is moving higher, we can keep adding to our position. Okay. Because we have new buyers. We have buyers coming in here, new buyers coming in here, and these new buyers are helping us pushing our price higher, right? Making even more profits. Okay. And let's say in this area right here, we finally, right, break support in this area here. Now we can close all our positions. All right. And then that would be our sell signal when the price finally breaks support. Good question, Raymond. Good question. All right. Now, there is something else here too. Let me show you guys. As far as support, right? We talked about buying on a break of resistance, selling on a break of support, right? We have two areas of defense. I call it your defense, right? Offense is good when we're buying, but we also want to have good defense. All right. And there are two areas where we're going to sell. The first area is here, right? We always have our support down in here. So if we bought here, all right, we can always sell here. But understand resistance becomes support. So if the price moves higher, like up this area right here and comes down, all right, and fails, we can exit here. All right, resistance becomes support. We just need that price to get above resistance a bit. Okay, and then, right, so if it comes down, break, right, breaks previous resistance, which is support, we would exit here, take a small loss. All right, and our goal as traders, we're constantly testing. I say, now I like to call traders, we're testers, not traders, right? We are testers. So what we're doing is we're testing these breaks of resistance, right? All right, or you can call that the whipsaw, right? So we might get in, we might have to get out quickly because guess what? Broke support in here or broke support in here. So we're constantly testing because there's no guarantee, right, that the buyers are going to break resistance, or even when they break resistance, there's no guarantee that that will turn into a markup phase or a trend, right? So we could get in here, right, come back down, right? Take that loss. And then we might have to do that a few times. But the goal is we want small losses. So we want to take small losses, big wins. We need this markup phase. We need these trends to pay for our small losses. Okay. All right. So, all right. Good question, Raymond. Good question. All right. So let's move forward here. Let's move forward. And stop me if you guys have any questions. All right. This is how we learn. So stop me if you guys have any questions. The next chart here is trend following. And we need to understand, right, that we really need to trade, right? And there are books that we give our traders, right? Our traders that get our trading systems. We give them a book called Trend Following, and then we have bundle systems that we have many books that we give our traders. Okay, so that they understand the importance of trend following. All right, we need trends to make money trading. We need the trends because we're constantly testing, and because we are constantly testing the market for breakouts, all right, we'll take losses. All right, and just know that we need these wins, these trends to pay for our little losses that we take. All right, all right. So here is that markdown phase we talked about. All right, here is the price making a low here of, let's say, $50. All right, it fell from, let's say, $100 here. Every single trader, the majority of the traders that I've spoken to through the years, right, they always try to get at the bottom here. All right, understand that this is not tradable. All right, if we draw a line here, that's the accumulation phase. So we're trading their support, and what could happen is that the price can continue to do this, go lower. All right, so we want to wait for that consolidation, wait for the buyers to enter, right? Wait for the buyers to come in, and that's where we enter. That's where we enter, right here when the buyers come in, not here. All right, not at the bottom here. Okay. This is important. Just remember this, guys. All right. We do want a low price, right? We want a cheap price. We want a low price, but we need buyers to come in first. And what happens a lot is if we buy here, that $50 mark, and I know here where we should enter on a break of resistance, that might be $75, right? And a lot of times we're like, man, I missed it. I could have gotten it down here at $50 and now it's $75 here. All right. And I could have gotten it here. But just understand that this is not tradable. All right. So we're going to buy here, enter here on a break of resistance. All right. And then we're going to sell here on a break of support. We'll never get the very top. All right. We'll never get the very top. We'll never get the very bottom, and we'll never get the very top. We need the price to bend. We need sellers to come in, break support. That's our confirmation that the trade is over, and we would buy here and sell here. What could happen is this, right? Price could come down like this, okay, and it can continue to do this. All right. And then if we exit here, if we don't let the sellers come in, and as price keeps moving up that markup phase, if we exit anywhere in here, guess what? We're not letting our trades run. We're not getting maximum profits to pay for our losses, right? We need that maximum. We need that trend, right? We need to price to continue through that markup phase, all right? So we get those big trades. We need those big trades to pay for our losses. That's the way it works. All right. Hope that makes sense. All right. We call this the meat of the trade. We are not going to get all of the trade. All of the trade. We want the meat of the trade from here to here. All right. That makes sense, everyone? That makes sense? If not, let me know. All right. If not, let me know. We go over this every week. All right. So if not, let me know. This is where we want to buy, and then this is where we want to sell. We're going to buy here, sell here. Buy here every time, sell here. All right. No emotions. The meat of the trade. All right. So let's take a look at some live examples. Live examples. Any questions on this? Let me know. We're going to go through some live examples. All right. Let's see here. All right. Let's see here. We're going to go over several examples. When we are new to trading, we need to look at these charts, chart after chart after chart after chart, until we start to recognize these patterns. Okay, trading is all about patterns. All about patterns. All right. So let's go through this example right here. And let me know if you guys have any questions. Pretend that this hasn't happened yet. All right. Pretend that this hasn't happened yet. Let me see. Hold on. Can I move this? All right. Just pretend that this hasn't happened yet. And here we are. Here we are. Markdown phase. Right. Let's pretend this hasn't happened. This hasn't happened yet. All right. All right. All right. Stay with me. All right. Here's our buy signal here, buy signal here. All right. Price broke resistance, green candles. These green candles are your buyers. Those are your buyers, right? Green candles, buyers, right? Red candles, those are your sellers. All right. Those are, now understand, trading is a zero-sum game. So they're buyers and sellers, guys. And it's a zero-sum game, meaning we no one shares in the profit. So if you guys, if you're not on the right side of the trade, we are going to lose. All right. But then someone else will win. All right. So we want to make sure we're doing this properly. All right. So it's a zero-sum game. It's a zero-sum game. So here is resistance. Here is support. Buyers came in, we bought, right? Price came back down, we got out here, right? This white arrow here is our exit to get out, right? So let's say we lost, let's say 10% here, right? As an example, 10% here. Guess what? We got out here. Look what happened. Sellers took that price all the way down, right? So we didn't lose 80% of our account. All right. So let's say we lost about 10% here, 10%, all right, or 5% here because we got out quickly. We didn't lose 80%. All right. And that's most traders. All right. Let's keep going. I want to show you guys why we buy at resistance, but most importantly, we sell on a break of support. All right. Just looking at random charts, random charts. Here's another one here. All right. We can't control price. We can't control the price. All we have to do is get out, right? And get out quickly. And we want small losses, right? We want small losses. All right. So here we bought on a break of resistance right here on this candle. Price spiked up, came back down. Resistance becomes support, right? Resistance here becomes support. We were forced to get out. Look what happened after we got out. Okay, very, very important. Remember, we're going to buy on a break of resistance. We're always going to sell on a break of support. We need to be able to get out, protect our capital, right, for the next trade. All right. There's no guarantee. And I know as traders, especially as new traders, we want that guarantee. We want that price to go up, right? But understand, right? We don't control the price. Our goal is to play defense always. All right? Always. All right? Same thing here. Buyers came in again, right? Broke resistance, bought here. Guess what? Sellers came in, right? Broke support. We had to get out. So remember that we always buy on a break of resistance, sell on a break of support. Now, I'm not showing you guys how we make money. I'm showing you guys, right, how we protect ourselves, right? If we play a really good defense, right, the offense will take care of themselves, all right? So defense, 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 all right? And the reason why this is difficult to do is because when we trade, we're trading our capital, our money, right? And we don't want to close that trade because once we close these trades, guess what? It's real. It becomes real. So we want to hold on, hold on, hold on to these losses, hoping that the price will go back up. But guys, sometimes it doesn't go back up. All right. I mean, here's a good example of that, right? Here's a good example. This stock right here, and we have chart after chart after chart after chart after chart where there's a stock or futures or forex, doesn't matter, where it was here, all right, fell all the way down here. All right, this is a year, this is 2022, here 2020, a year later, and it's still down here. When we could have gotten out here, just taken the small loss, right? This is a small loss. This is a large loss. This is an even larger loss. All right. So we can't play that game. We've got to take a loss, right? Get out quickly. So we need to have a process in place, right? Where there is no emotions. I tell traders, you can't trust yourself in these markets, right? You can't depend on yourself when you're trading. You need a process, a tight process, right? To help you to close the trade, exit the trade, get out. These sellers, when they come in, when these shorts come in, all right, or people are just getting out of the position because they're afraid that they keep losing money, they just dump these stocks. And this fell from about $17 to right now it's $1.54. All right, that's a big drop. Right. So as traders, we don't want to stay in stocks like this, right? We want to, if we get in, right, get out quickly and then look for the next opportunity. All right. All right. We'll go through a few more and we'll be done. So I just want to show you guys defense first. Forget about making money. When we get into trading, we want to make money so quickly, right? But we need to learn how this works, right? We always testing, right? I'm not going to show you guys how we stay. I'm not going to show you any charts this evening on the markup phase. I want to show you guys the markdown phase, right? If you can protect yourselves, right, from these losses here, then, right, the markup phase is easy, showing you how to stay in the trend and keeping stay. And that's the easy part. Getting out is the hard part. All right. So here we are. We testing as traders, right? We're constantly testing. All right. But our goal is to get out quickly when we're wrong. We need to get out quickly when we're wrong. All right. So another example here. Here we are. Here is our resistance line. Price broke resistance. I know it's hard to see, but you guys can make this out. Buyers came in, green candles, right? Price broke support. Sellers came in, red candle. We got out here. So we took a small loss here. Let's say we took about a 3% loss here. Red candles came in, right? Here, have resistance here. Buyers came in, big buyer came in, price broke resistance, right? We got a buy signal here, failed. This is not a trend. This is not tradable. All right. All we can do is get out. All right. So we got out here. We took a small profit here. All right. So let's say that's a 2% profit here, or probably a 1%. But guess what? We are not in the trade for this loss here. All right. Buyers came in again. Now, I'm not saying we would have taken all of these trades. This just follow me, right? We are cutting losses when we're wrong. We are protecting, playing defense. All right. Here, buyers came in, price broke resistance. All right. Sellers came in, price broke support. We're always going to buy on a break of resistance, sell on a break of support. Guess what? We got out here. Let's say we took a 3% loss. We are protecting our capital. All right. Defense first. All right. We got out here. Look what happened to the price. Right? Look what happened to the price. Right? From here, it was $35 here, right? It fell all the way down here to about $5. 644 is here, so about $5 here. All right? We tested again here, tested again here, broke support, sellers came back in. We can't control the sellers. We can only control, right, our entry and our exit. What would have happened if we bought here? And I want you guys to think about this because we're wrapping up here. And for new traders, I just want you guys to think, right? I just want, before you take your next trade, you just want, you need to think about this, right? We know we are going to take losses in trading. We are going to take losses, right? It's a game of probability, a game of math. Our goal is to minimize our losses. All right, so I'm going to go here. I'm going to go here. Forget about making money. Right now, we're only going to talk about defense. Defense, defense, defense. Forget about making money. The offense will come. You have so many opportunities to make money. But if we're out of the game, if we don't play good defense, if we let those losses run, right, we will not be around. All right? And our best traders, right, play very, very good defense. All right? So I'm going to go through it. We bought here, right here. We bought here, right? Didn't continue, got out here. Protected the account. We bought here, right? Trade didn't continue into a trend, we got out here. Protected the account. Constantly testing, right? Same thing here. We bought here, right? Broke support, got out. Protected the account. You know, we can go through this and we could have 3 or 4 or 5 losses and one big win and pay for all of the testing that we do, all of these little losses here, right? The other thing is what happened is this. Most traders have big losses, small wins. So their wins look like this, but they let their losses run like this, right? Big losses. And that's what we don't want. So as new traders, if we could learn this concept quickly, right? Defense, 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 right? We buy when the price breaks resistance, and then we sell when the price breaks support, right? That makes sense? Does that make sense, everyone? Does that make sense? Right? Buy on a break of resistance, sell on a break of support. All right? Because when the price breaks support, that's sellers coming in. And again, we do not know. This stock fell from $35, and if I put it on a wider time frame, I want to see what it looks like on a monthly time frame. Let's see what it looks like. That's on a weekly time frame. Let's see what it looks like on a monthly time frame. So 65. So we'll keep it on a weekly. All right. So on a weekly time frame, it fell from $65, guys, $65 to $7. All right. All right. So we want to be down here, right, in that markup phase This is on a monthly time frame now, right? Get into buy at the bottom. We want to be buying at that bottom. Okay, when we buying at that bottom after the selling is done, after the selling is done, kind of like we did here, right? At the bottom, coming out that accumulation phase, right? Break resistance, markup phase, right? Same thing here. Markdown phase, we want to be waiting at the bottom here, right? Buyers to come in, give a buy signal, and then we take it back up. All right. All right. So thanks for coming, guys. Now we do this beginners class every Tuesday. Tomorrow we'll have what is it? Trading mindset, traders mindset, trading in the zone. All right, trend following and trading systems tomorrow. All right, so keep coming, keep getting this information. All right, especially new traders. Right, we don't want to be randomly getting into these trades. All right, we need to know what we're doing. All right, we need to know what we're doing. All right, take care, guys. See you tomorrow. Take care. Bye bye.